running a bit late, but we've had some technical issues in the office, mainly because Hayden and Ed, who have been very kind to record and set up a studio for me, decided that I wasn't pretty enough to focus just on me, so they wanted to put something behind me to make things more interesting. And you'll also have to forgive me because I'm a little bit out of breath, because I got all stressed out looking for a parking space. In fact, it was so bad that I actually said to the Almighty, listen, if you find me a space, please, quickly, I'll go to the synagogue for the next 3 Saturdays. And then all of a sudden a space became clear. And I reversed into it, and as I reversed into it, I just said, it's okay, don't worry, I found one. So, but life doesn't always run that smoothly, and the idea of tonight's show is basically to talk about the rules of the game. And before you can go into business, before you ever go into business, before you do anything, there has to be some planning, and we have to protect ourselves. There's a lot of things out there that attack us. They attack us all the time. We're looking at not just HMRC, but not just crooks. We're looking at stupid things as well. We're looking at incompetence. So before we go any further, because I know in future episodes we're looking at helping you to grow the business and do things that are more interesting, like making money, but I think just having a quick word about getting your contracts right, getting your house in order is probably the right thing to do. So forgive me, this is not going to be the most interesting of all the podcasts we do, but it's absolutely vital. And if you know this stuff, learn it at a deeper level. So the first thing, business infrastructure. So let's start with the framework that we trade in. So it's not a free-for-all. We can't just set up in business, be taking money, be dealing with clients, be dealing with customers and employee staff without having some infrastructure. So the first thing to look at is the type of infrastructure we're looking at. So there's a few options. The main options are limited companies, sole traderships, and partnerships. There are more, but let's look at these. So the one I favour most is limited company, because as the title suggests, you have limited liability. Now, when you set up as a sole trader, or you are a sole trader, you are pretty much liable for everything. Now, we're never going into business to avoid paying our dues. We're never going to business to cheat anybody, or to not pay people, or not to carry out our obligations. But things happen, and if you're a sole trader and these things happen, then you could spend the rest of your life paying off these debts or suffer these problems at a much more personal level. Because let's face it, our business doesn't stop when you close the doors of the shop or your trading entity. It carries on into your home life, and it carries on in through your family, and it has a very emotional effect on people as well. So we just want to make sure that if something does go wrong, then at least you can limit the amount of liability you have and give you to enable you to start again. So a limited company does that. I mean, the word limited liability means that anybody operating a limited company, any debts you have, any liability you have, is restricted to the amount of capital you put in the company. And a lot of companies are set up with a capital of £1. So this is what to look at. Remember, one of the reasons that we do this is to encourage people to take risks, encourage people to be entrepreneurial, to make people be inventive without worrying all the time that if it goes wrong, you can end up in prison. I mean, going back several hundreds of years when the concept first came out, you've got to remember that people used to look for investors to maybe finance bringing silk in from China, or bringing in spices. And what they would do is they would look around and they would say, who will invest in my project? So I'm just looking at who's typing in, and sorry if you're getting any problems with the video. That there has been some delays. It should be okay now. So what you do is I would go along and say, hi, I'm Stephen, how do you do? I've got this great project. We want to bring in this great silk from China, and I need some investment off you to pay a deposit, charter a ship, and basically get everything coming in. And you might say, that's a great idea, I'll give you £10. And somebody else will give me another £10. And then off we go, and the ship's attacked by pirates, and it sinks, and before you know it, you've lost all your stock, and the families of the crewmen are suing you, and all your people that have given you deposits for the stock are suing you, and before you know it, you're arrested, because in those days you would be arrested, and you're in a debtor's prison, losing absolutely everything just because you invested £10 into a project, because that investment made you a partner. Now, obviously, no one's going to invest in anything. Would you invest if you knew that you could end up losing your livelihood over a £10 investment? Well, of course you wouldn't. So they brought out the concept of limited liability, which means that you can only lose the £10. Great. Companies thrived, the country thrived, it did very well. But it's not stopped there, because unfortunately today there's been a lot of changes in the way the government across the world see what we would perceive as advantages of a limited company, and they're looking to make people more responsible for making sure that the company doesn't go into liquidation. I mean, I've actually personally suffered from me supplying goods and services to companies who have then gone into liquidation and then set up again in the same building. And sorry, we're running a bit right. Sorry. So I was just reading some notices and it distracted me. My apologies. So I've been a victim of companies that have taken goods and services from me and then gone into liquidation. And there's nothing I can do about it. The company's gone. And I mean, in fact, there was this one guy that I actually went to school with. And if you've got any stories yourself, do let me know. I actually went to school with this guy that turned up at my offices once, at my warehouse at the time, and he gave me a cheque for £6,000, which I took for stock. And it turned out that that the bank account was based on a company that he'd actually closed down 6 years before. So, of course, 3 years before. And so obviously I lost the money. So what the government have tried to do is stop a lot of that type of behaviour by making people more responsible for their actions. So if you trade wrongly, or you trade irresponsibly, or you're an out-and-out crook, then there's a lot of laws in place to actually stop this from happening. So on the one hand, you've got a really good, strong business common sense, but on the other hand, maybe if it's interpreted the wrong way, I've just been told not to bang the table, but okay. But maybe, but maybe if it's interpreted too hard, it stifles imagination, and But whatever it is, we've got to understand the rules of the game. So it's like the other day, I received a notification of an investigation into a particular client, and what's happened is that there has been some shenanigans in the supply chain. My client's done nothing wrong, but some of the people that supply him potentially have. And HMRC are now saying, well, if you didn't know, let's see whether you could have known. And it's it's how far do you go? How deep do you have to go in protecting yourself? Well, I don't think you can be too cautious, because there's a lot of hungry individuals out there to try and take away from you what you've got, and it's not good. So the first thing is, yes, by all means, consider your trading entity. If you're a partnership or you're a sole trader, you've got no barrier between you and the issues. At least if you've got a company, you've got some barriers. And that's going down not just to the limited liability principle, but also because the company is a separate entity from you. So you might be John Smith, but that's a different person from John Smith Limited. So if there's any problems, it is against John Smith Limited, and providing that all this has happened in the normal course of trade, then you won't have any problems if the company does fold. So I know it's a very negative thing, but we've got to look at what you can lose rather than what you can gain if you go into business. And this is what this is about. I mean, there are, just going back to this supply chain. Many years ago, a gentleman came into my warehouse, and he had some watches that were very, very cheap. I didn't think anything of it because that was the nature of the business I was in. I used to buy and sell clearance stocks. And he had these watches, and I said, yes, I'll have them. And he said, well, it's £1,000. I said, okay, I'll have them. So then he said, but I need a cheque off you, because in those days, cheques were a lot more popular than transfers. And, but I didn't really trust him. So he said, well, just give me a cheque. And I said, okay, I will. But if you don't bring that stock in by 10 o'clock tomorrow morning, I'm cancelling the cheque. Sure enough, 10 o'clock the following day, he didn't turn up with the watches, and I cancelled the cheque. About 2 weeks later, somebody came into my warehouse with the cheque, which had been signed over to him, because in those days you could sign the back of the cheque, and that could then be cashed by the person that you gave it to. And what this supplier had done was that he came in knowing that the watches didn't exist, but he still took the cheque off me with the full intention of only having it cashed with this other gentleman. And even though I wasn't responsible, I knew that the guy that I gave the cheque to wasn't really that trustworthy. I just never thought to question that, because no matter what you do, if someone's out to cheat you, you can never second guess them. So it's best not to deal with them in the first place. And this brings me on to the government's attitude of knowing your customers, know who you deal with. Do checks on people. Check, not just a credit check, but who are they dealing with? What type of things do they deal? Is it likely that they would have the type of deals that they're bringing to your door? Because believe you me, no matter how clever you think you are, these guys, they don't operate on the same wavelength. And it is good business. I mean, I've found that when we're younger, money's more important. There's only two things that are important when you're younger. One of them's money and the other one's sex. But as you get older and you start doing better and the business is more mature, you find that money is still important, but it's not as important. You notice I didn't mention anything about sex there, but you do have money. And you do tend to take more care of who you're dealing with. So I've always found, especially as I've got older, that by following government guidelines and government initiatives, it might cost you a bit more. It might mean that there's certain deals you can't do. There might be more hassle to it, but over time you live a lot easier and you don't worry as much. And you don't tend to fall into these traps of dealing with idiots and dealing with crooks. And you don't fall foul of not having government support or not doing what you're supposed to do. And that's a big thing to be able to sleep at night. So limited company, yes, limited company. There are some tax advantages of channeling income through a limited company rather than just being a sole trader. There's not a huge amount of difference anymore, but they are worth looking at. The main thing is if something does go wrong and it's not really your fault or it's just circumstances, at least you don't pay the rest of your life. You don't spend the rest of your life paying it off. Now, just looking at the overall infrastructure now, it's changing. It's changing rapidly. I mean, we have the introduction of MTD at the moment. We have Making Tax Digital, and Making Tax Digital is all about enabling HMRC to more easily and quicker check that the returns you're making, VAT returns at the moment, but it's heading in all aspects of HMRC. It just makes it easier for them to look over your accounts. It's going to get more and more complicated for them. But unfortunately for everybody that don't keep good books, you are going to fall foul of HMRC. There's no doubt about it. There's no more just nudging things, just sort of tweaking things. It is as it is. If there's no invoice, no legitimate invoice, you're not going to be able to make a claim for expense or for VAT. So if you lose the invoice, you've got a problem. I mean, we are tackling that in many, many ways to make life easier for people. Now, the people that comply and the people that do as they're supposed to do won't have any of these problems. In fact, they'll have better information, and good information enables you to make decisions much more easily. So just bear on, as HMRC take away, they're also giving. So they're giving you the tools to create a much better business. All you've got to do is make sure that you do things as you should do them. These are the things that we've got to look at. I mean, I mentioned KYC before. I've had people that have dealt with companies that they didn't really know who they were. They've just done deals, but why not? And then it turns out that these companies have been involved in some iffy stuff, and HMRC have gone back to your companies, and they've cancelled the VAT number of the supply. That means that any VAT you've recovered in the past from this company, you can no longer recover and have to pay it back. So it is vital that you know who you're dealing with. It is vital that you get your contracts sorted out. People so easily misunderstand what people say to you. It's very, very easy to go into a verbal contract with somebody and there's expectations on both sides that are not really clarified. And if you're not clarifying, what the terms of the contract are, then people have got very short memories, and they only say, well, you said that, I said that, and this is true not just of going to business, buying or selling with somebody, or entering into a service contract, but it's also true of employees. So just make sure that everybody understands the terms of the trade. Now, if you do have any questions, just let me know. If you're watching this live, send your questions in. If you're watching it on one of the repeat episodes, just email me. So you can email me at stephen@accountsdirect.biz, and I'll try and answer your questions as well as I can, and see how we can help. But my attitude now to sort of safely guide you along the path of a successful business, just bearing in mind that good bookkeeping is good business. Get your contracts right. Get everything that you should be doing done. Make sure that health and safety isn't an issue, because remember, if something goes wrong or someone hurts themselves, then as a director or owner of the company, even if your depot is 100 miles from your main office, you could be personally liable for that. So as the owner of a company, you are responsible for everything that goes on. Now, it's not your fault it goes on, but you are responsible. So do make sure that you any eventuality is covered, even if it's covered on insurance. Make sure your insurances are right, because it's so easy to fall foul of everything. I remember a while ago I was talking to a client, and they had a bad member of staff, and a lot of people's problems do come from being with the wrong people, whether it's staff, suppliers, or even customers. And this lad was having his lunch break in the storeroom, and in the storeroom there was some Demic ornaments and some Demic toys and things. And while he's having his lunch, this guy's lined up all these ornaments in a line, and he's throwing balls at them and knocking them off and smashing them. And he thought that was a great game. I mean, why should he care that these ornaments can be returned and a credit given for them? Now they're all smashed over the floor. And when people do silly things like that, it's not always a case of once they've learnt that they're okay with everything else. It's not. It's like telling people one thing at a time. You correct one thing and they go and do something else. So you've got to protect yourself from stupid people. Now, this person sacked this guy, and because that wasn't the only thing he was doing stupidly, but he got sacked. My client was taken to court, so taken to a tribunal, and he lost it. And he lost it on the grounds that the employee didn't know he couldn't do that. He didn't know he wasn't supposed to throw things at ornaments and smash them. and that you know, sometimes you've got to put signs on the doors to tell people how to wash their hands, or put in this day and age, put the, what do you call it, the gel on your hand to extra clean yourself. So you can never be too careful about what you're doing. So at the moment we've covered the infrastructure, which is limited companies. So make sure that limited companies, everything's up to date. Now, something that people do fall foul on at the moment with limited companies is that they're not declaring who the person of importance is in the company. So not only do you have to declare the director at Companies House through the annual returns, but you also have to declare who is an influential person in that business. So if your shareholdings, because remember it's the shareholders that own the business, not the director, if the shareholders, if you hold more than 25% of your shares, of the shares of a company, or you advise a director, you've got to declare yourself at Companies House as being that person, and therefore you cannot advise the company unless you do so. So again, shadow directors, people setting up companies with other people's names, they're catching everybody. So you know, if you've got a company that's not trading, then you know, shut it down. If you don't need it, it's so cheap to set up a new one. Set up a company as you need them. I understand a lot of time people have different companies because they've got different ideas, so they do a different company for each idea. But maybe we should talk about that as well. So if anybody does want to chat about that with me, then please feel free. Now, I've actually gone through this quite quickly because even though it's a very complex area, there are areas that we'll come back to over the courses that we do. So I'm just reading now from Chev. Chev works for us. She's one of our accountants. So a company I knew lost a claim after an employee doing donuts on a forklift truck and getting injured because the trainee didn't clear advise against doing a donut. I'm not sure if I understand that. Am I missing something there? Sorry, I don't understand that. So we've got one. As a small business owner, when do I need to register for VAT? VAT is another one of those dangers. Now, the concept of VAT is to add some tax onto the value you create within a product. So, but in real terms, what it means is that you have to include 8% in all your 20% within all your sales, and declare it to VAT every quarter. So, for instance, if I pay £1 for something, I have to pay 20%. So that item would cost me £1.20. But if I then sell that item at £3 or £3.60, within that charge, there's 60%, 60 pence VAT. I then can knock the 20 pence I've already paid off the 60 pence and pay the 40 pence to the VAT. If I'm a trader trading business to business, then it's potentially an advantage to me. So I would want to be VAT registered, because obviously there are things like petrol and maybe rent and a variety of expenses that I can then recover. So I'll be quids in, but you've got to watch it, because a lot of people think no matter where the VAT money comes from, it's all theirs, but it isn't. I suggest having a separate bank account. So you have one bank account for VAT and just transfer your VAT in it each week, and then you've always got that money, and then at the end you'll always have a bit more to transfer back. If you're a retailer, then it's not such an advantage, because if you can sell something for £3.60, then you'd probably get £3.60 anyway, so you don't need to add the VAT onto it. The retail customers don't always appreciate that there's VAT in something. They just see the end product. So the VAT threshold at the moment stands about 85,000. So you've got to be registered once you hit that, or you think you're going to hit that amount, or you hit the equivalent amount in a quarter, and it's not a fluke. So you've got to be very careful with VAT. It's probably one of the biggest reasons why companies fall into cash flow problems, because they spend the VAT and then they don't have it. Sometimes if people sell certain goods like children's wear, and certain types of food and livestock and things like that, there is no VAT to be accounted for. So it's pure refunds every time. So so for people like that, it is a bonus. I have often seen that certainly companies that deal in stock that are not VAT registered, they're going to struggle to survive, because let's face it, by the time you've paid expenses, by the time you've taken a wage, you need to have a turnover of more than the VAT. So the VAT people know what they're doing. They're saying, well, if that's what you're turning over about the £80,000 a year mark, then you're a startup, so you're probably either going to improve, and they're giving you a chance to get going. I personally think sometimes it's a bit unfair, because you can have two people in exactly the same business, next door to each other, and one's slightly over the threshold and one's under it, and the one under it's got a special advantage. But who am I to judge? So what I'm saying is, make sure you keep your invoices, make sure you keep everything, and the threshold does change every year, and at the moment it's around the £85,000 mark. So that's what else I've got written. I did have a lot more written down here, but my computer went off, so I had to scribble it on a piece of paper. So the trading vehicle is important, the insurance that you take out is important, and good bookkeeping is tremendously important. And of course we've got the anti-money laundering rules. Now, anti-money laundering is a catch-all for everything. You've got to show where money comes and goes. And the banks are very hot on this. I remember when I was starting off, all you had to do was walk into a high street bank, literally walk in and say, I want to open an account. And I don't think I was ever asked for ID or anything. They just opened the account and sent it to the address. I sent the checkbooks when they were printed to the address I gave them. I could have been anyone, but now it's not like that. So now you've really got to jump through hoops just to get a bank account open. And if the banks see some strange activity going on, then you might have to provide explanations. I mean, if you've got a deal coming in and it's different to your normal transactions, so for instance, if you normally turn over £4,000 a week, made up of increments of banking of, your average sale is £300, and all of a sudden you put £20,000 in, you better make sure that you can explain to the bank and show complete evidence of the transaction in total. So it's all about transparency with HMRC. It's all about, they're not out to sort of put you out of business or cause problems for you. They're looking at protecting the public interest. Now, there are there used to be a lot more different types of VAT rates, but just assume it's either 20% or 0% for now. You can calculate things on what they call a flat rate basis, which means that you depending on the industry you're in, you pick a fixed amount. But all this isn't important to you. We'll take care of that, or your accountant will take care of that, or even your bookkeeping software will take care of that. What is important is that you realise that you have a responsibility to file VAT returns every 3 months. If you do have a large turnover and there's a question of cash flow problems, you can request to have them prepared monthly. But in the whole, look at preparing VAT returns every quarter, and just make sure they're filed on time correctly, and you've got the supporting evidence to make sure that they go through. So there are other questions that we get asked, like, when's the best time to form a limited company? Okay, it's just come through now. I don't think it's a matter of when's the best time. I think what we need to do is look at your personal circumstances and get things right from the start. So my attitude is, if you're going to go into business, set up a company. Do it right away. I don't think I don't think it's a question of when should I. I think it's, if it suits your style of company, your style of operation, then set up a limited company. Another advantage of a company is that you can more easily allocate shares. You can decide who the partners are. You see, in a normal partnership, which is which can be problematic, everybody is deemed equal. So if something happens to one partner, it could have a massive effect on the other partner or partners. So when you've got a company, you can allocate shares. So you can say, well, you're only responsible for the shares that you've got, and you can split the profits in those ratios as well. So if you feel you want to give somebody 10%, you can give them 10% worth of shares. People give employees, they give all sorts of stakeholders shares to encourage people to be a part of the company without giving them too much say in the company or even any liability within the company. So that's also good. It is also, for some strange reason, it's easier to get financing with a limited company. I think it's really not a strange reason. I think it's because accounts are logged at Companies House. So every year you have to file along with an annual return to say who the shareholders and people of interest and influence and directors and all that type of thing are filed. So I'm just going to have a drink. You also have to file a set of accounts. Now, depending on the size of the company, those accounts reflect more or less information. But ultimately, because they're filed every year, they're quite a dynamic thing to do, and lenders can see what's going on within the company. Obviously, the more information they give, the more comfort a lender can get. It also makes it very easy for a lender to see whether the accounts that you've given them are the same as that you filed on Companies House. Because if you give a lender, and it does happen, a set of accounts that show £150,000, but that doesn't reflect on Companies House, then it might be, which ones are going to be wrong, the ones you filed at Companies House or the ones you've given to the lender. But the HMRC will also see that, because they'll see what you've put down in the tax returns or the accounts that you've submitted, and they can also see that against Companies House. So I suppose it does give the lenders more comfort when they are considering lending or giving you more stock supplies. So that's I'm just looking for more questions here, because I'm running out of time, and we're nearly ready to finish here. But there are. Look, if you look at business, that the business is, there are rules to the way we act in this business. There are things that we should be aware of. It's not just about tax. It's not just about limited liability. It's about the way you deal with people as well. Now, in up and coming episodes, I want to talk more about how your relationships with clients and suppliers do develop, and how we can do a little bit more promotion and how we can bring in more customers. That's the real nature of these podcasts and this course. But I did want to just make sure that we've got the contracts in place, we've got the right company vehicle, that you fully understand the repercussions of making tax digital, payroll, employment contracts. Everything's right. So I'm very more than happy for you to contact me and just go through a checklist to make sure all this is right. If you want, just let me know, and I'll have someone go through the checklist with you to make sure that you've got all this put through properly, even to the point of setting up your accounting software in the correct way. There's also lots of software that can help you when you're dealing with clients to know to record what's been said, what's been agreed, over and above specific contracts. So what I'm looking for here, so I've just had a question here. I do need a partnership agreement if I'm setting up a new business with friends. No, that's actually a good question, because where you don't set up a contract, HMRC and perhaps a creditor will deem that the profits are split in equal amounts between the partners, and you could be liable for all the debts equally, and that might not always be the case. So I would say, whether it's a partner, a supplier, an agent, a franchisee, anybody, get the contracts right. Get your house in order before we start venturing out in that world. I've had another one, what do I want for dinner? That's okay, thank you, whatever you want to give me. So that now we're looking at the consequences of bad bookkeeping. I don't want you to worry unduly about all of this, because consequences of doing anything wrong, and at least people losing money, will always come back and bite you. You know, when it comes to bookkeeping, your bookkeeping is your way out. It navigates you through the hell of what things could be if things aren't done properly, or if something goes wrong. So what good bookkeeping does, and it shouldn't really be good bookkeeping, it should be bookkeeping. It records everything you do and everyone you deal with. So if something does go wrong, you've got a way out of it. I remember watching a news program with what's his name from Virgin, forget his name, terrible, Richard Branson, I've just been told. And he had a situation where he was accused of offering someone a bribe, and for some reason, which I never understood until now, he actually excused himself from the table and went into the toilets and made a note of the conversation. But you see, I didn't understand why he would do that, because it was just a conversation. Why would he have a notebook and pencil ready? I mean, these days you can do it on a phone. Because he knows, because people that know you've got to keep records of everything, and the clearer your records, the clearer the trail of your conduct, and we all know you're not going to do anything bad. So now I'm just looking at some more questions here to help me through. Any more questions for me? One more question, because you try sitting here under these camera lights and talking on the hop, because I did have a computer ready with all this and it all crashed 5 minutes before the show. I still don't understand the one about the donuts. And Anthony, I'd like a special thank you for joining us tonight. Now, one question that I do does come up sometimes. It's about financing. So financing big purchases. So sometimes if you want to buy a house, then maybe buy it in your own name, because it's your house. So I think differentiate between what's a business asset and what's a personal asset. So if you want to finance a big purchase, I think it doesn't really matter whether you're a limited company or not, but you can gain finance from things like leasing equipment and trade factoring and that type of thing. There's loads of things to finance, but I didn't want to make this discussion about how to get finance. That comes later, and we do have people around us that can help you individually with that. Financing is a big part of making sure a business works. But what I would rather say to you about financing anything, whether it's a big capital finance or anything, that comes in the cash flow, the cash flow projection, the business plan. So many businesses set up and they don't know what it is that they need. They don't measure the dips. So I've got a cash flow plan for every little project I do, and I monitor it. So I know month by month what we're going to need. I mean, lately we've taken influx of new members of staff, but before we did so, I had to do my budget to see when and where I would need that money. So I think it's very important to plan everything you're doing. Planning is business all over. I mean, everyone laughs at me because I plan next year's business today, or at least I try to. So I'm constantly watching the road and adjusting things as I'm driving, but I try to keep to the plan, and I think you need to as well. It goes against the instinct of the entrepreneur, because you want to get out and you want to sell things and you want to manufacture things, but do the plan. I'm a big fan of Coronation Street, and I'm not just saying that because we've got clients from Coronation Street, but I'm a big fan of the show, always have been. And there used to be a character called Mike Baldwin, and there was a younger character called Steve MacDonald. And why I'm bringing this up is because Mike was a seasoned businessman with a factory and making jeans and all sorts of things, and Steve was a teenager coming on with a great idea. And they sold, the idea was to sell these T-shirts. So Steve got along, they made these T-shirts, sent them out there, and they did very well. So they got one good order and they made a bit of a profit. So Steve's saying, right, we've proved it, proof of concept, we call it. And he said, let's go and take on this factory, let's get all these machinists, let's get all these machines. And the older character, Mike, said, no, which is what I would say. We'll get a few outdoor machinists with a few second-hand machines, and we can use the storeroom at the back to sort everything out. And Steve was obviously disappointed because he wanted the shiny factory and being the big shop, but Mike was right. He wanted to really make it work before he jumped into everything, because Mike would have put in a cash flow and he'd have put month one, this is what we expect in, but this is what we expect out. And he would have kept things low until he saw enough of the sales coming in that needed the next jump. So bear in mind, I mean, do you really need that 20 megabyte computer, or are you is the one that you've got working adequately? Don't be so quick to jump into things. Check the plan. So first of all, looking at the cash flow, looking at the business plan, looking at what you will need will help you decide what type of entity you need, what type of money you will need, what type of software you will need. It will just tell you where you should be. I mean, I would love to go and open a shop in, I wouldn't at the moment, but I'd rather open a shop like Harvey Nichols in the centre of town, rather than open a market stall on Newton Heath Market. But maybe we should be opening the market stall first to test the market and then grow from that. So I've been asked the question, if I was starting a business on my own with very little finance, would getting a loan be better, or would I be smarter using a chunk of my own savings? Well, that's actually quite a good question. And it's not always a question of choice. You can argue, should you go into business without actually being able to afford to lose money? If you can't afford to lose money, then you're probably taking more of a gamble of borrowing money, because if you borrow money and it fails, then you've got to pay the loan back as well. If you've got your own money, then the worst that will happen is that you lose your money, rather than having a loan, being stuck with a loan. And I've always been very nervous about borrowing money, mainly because no one would ever lend me any money until I've actually got some money, and then they will lend me, but other than that they won't lend me. I mean, I told one, well, we'll lend you £10,000 if you put £10,000 in a deposit account. I thought, okay, thank you very much. But that's when I needed it. But you know, so I think it is a good, but you should be wary of any repercussions if the business fails. But this is where a limited company comes in, because when I'm not saying set up a limited company, borrow money, and then it doesn't matter if it fails, but it does give you that cushion if the bank's willing to lend you some money without a personal guarantee and that type of thing. So, but it goes back to what I'm saying: get the infrastructure of the business right, so that you're planning it. So you're looking to borrow money, but then say, well, what do I need the money for, and then when do I need it? So you might not need it all at once. You might need, say, you need £10,000 to finance the project. As long as you could secure funding, that you need £2,000 at day one, £2,000 in month three, and so on and so forth. So just be a bit more, a bit aware and plan. So if you need help with a cash flow projection, I've got plenty of templates. I'm sure one of our accountants would love to get their mitts on a job like that, because they're so simple, but they can charge plenty for it. No, if you do need any help with costing and that type of thing, do come and talk to me. You've got other areas, because I mentioned costing, that a lot of people do get the prices wrong. You know, they go for what the market can bear rather than look at a sensible profit run. I mean, I had a guy in before that was bringing stuff in from China, and because he was running late, he had it flown in instead of shipped in, not realising, not thinking that then will put more cost onto that product, which is now more than he was going to sell it for. So that one little mistake. So do look at everything. Don't chance things. There's plenty of chances that do very well, but let's not be one of them. So I hope that answers the question. So we've got now, your top tip for a business with a consistent turnover wanting to grow, expand. Well, these are the best types of companies. A company with a good turnover is, and a regular turnover is best placed to start expanding. When you've got people that sort of jump into things and or maybe have a good week. I mean, I knew somebody that when they had they weren't doing so great, but they had a good few weeks, and then they decided to take on like a mortgage of hundreds of thousands of pounds. And I was saying, well, why don't you wait till it becomes a bit more stable? But the question of when to expand is something that we're going to cover in later episodes. But I'll go back to the whole format of this, the whole idea of this particular chat, to say that planning is everything. Know the rules of the game and know when to act on them. Just make sure you get your house in order, make sure you get your contracts right, make sure that you're doing everything HMRC and the government in general tell you to do, and keep good records so you can predict the future and safeguard where you are now. So good. I'm glad that was of help to you. We've been on now for a little while, so hopefully the next episode, well, I know it will be because I've already got it planned out, will be a little bit more exciting for you, because next episode we're going to start looking at how you can actually make money. So do feel free to contact me. Do feel free to email me. Doesn't matter how silly it is, I'll still respond. And next week we're going to look at how you can start improving your profits. So thank you very much for joining me this evening, and have a lovely week. Take care.